see the recording button start, and then I'll start. Hello, welcome. Innovative healthcare venture capital programs are essential for health systems to ensure long-term financial viability. These programs can be used to respond to market disruption, control costs, and shift to value-based payments. Our panel of leaders is here to help you discover core principles and share lessons learned to achieve success with value-added venture capital investment and management strategies. Please welcome Modern Healthcare reporter Tara Bano, who will moderate this discussion.
Hi, welcome. Thank you to our panelists for being here. We're fortunate to have a nice variety with respect to size and location of the health systems that these venture arms support. We've got Mount Sinai in New York, 8 hospital campuses and a medical school. Then across the country, CedarsSinai in Los Angeles, another academic medical center. We've also got St. Louis-based Ascension, one of the country's biggest not-for-profit health systems with more than 140 hospitals. So each of them has a different venture capital focus. And I hope we can open by having each of our panelists kind of describe their health systems' venture capital investment strategy. Darren, let's start with you.
Sure. Well, good afternoon, and thank you for having me. I'll start a little bit with maybe how we came to be in the venture business. And it really started a few moons ago when CedarsSinai thought that perhaps we wanted to build an EMR. That story ended a little bit differently than we wanted. It was a long time ago. Ultimately, we ended up selecting a commercial EMR, but I think the imprint that it left on the organization was that we would basically be in the buy and not in the build business when it came to looking for enterprise software, when we're looking for outside innovation to bring into the organization. But as things began to progress and we wanted to push the envelope and try new things, bound by the fact that we weren't going to build our own software or build our own innovation, we really had to find a new model. And that new model for us was to figure out how to partner. And we realized relatively quickly that those commercial partnerships and the work of venture capital were very close together in terms of the way we were looking at it and what we were seeking to do. And so all of our venture investments, all of our sponsorship and partnership with early stage companies is always centered around this deep, deep belief of how can it help us strategically do things better and move the ball forward and help improve. And we only look at things that are centered around companies and innovations that we know not only will be a customer of, but candidly will be a significant customer of. And so that's really what we've built and why we've created what we've created.
Matt, can you talk a little bit about the focus at Ascension Ventures?
Sure. And to me, it may be helpful for me to maybe take a step back and just sort of describe the framework for how I'm seeing health system innovation market sort of being organized. And to me, I see 4 primary functions. The first is a project management function that is managing the introduction, testing, and scaling of externally sourced innovations. The second, that is, I think, a newer form, is this sort of feature product company creation that involves quite often internal software developers and entrepreneurial capabilities that also interfaces with accelerators and external entrepreneurs. The third is a technology transfer function where folks like Erik and Darren's organizations are developing valuable IP that they think about monetizing. And the fourth is this area where I play, which is this investment function that can involve off-balance sheet investments when folks get started, a captive venture fund, which is how we got started, or a third-party venture fund. Our fund has been around for 20 years. We've raised over $1 billion. And the unique thing about the model is it comes from 13 not-for-profit health systems who aggregate to north of 300 hospitals and almost 80 billion in net patient revenue. We're a stage agnostic investor, so we're doing startups, venture, growth equity, and buyouts. And we take a very broad view: services, software, devices. We've invested in over 80 companies in our history. We prioritize investment value over strategic value. And the strategic value is I think of as a call option that happens through how we engage with our internal experts around companies we evaluate. We don't mandate adoption of the portfolio companies. So unlike Darren's model, where there's this deep upfront connection, those connections usually happen, but they happen not always, but sometimes later. And then our team has been doing this for 20 years and battle tested through multiple investment cycles. A lot of folks who are newer to the game have not been through those vacillations.
Erik, how about Mount Sinai Innovation Partners? Can you talk a little bit about your strategy?
Absolutely, and thanks for having me here today. So there's a lot of similarities between what we do and what Matt and Darren have described, but there's some differences. Mount Sinai, again, is one of the largest academic medical centers. It's certainly the largest in the New York City metropolitan area, and our program from our venture program, I should say, really is fully integrated with and connected with our commercialization engine. So we do have a very large research enterprise and, of course, a very large clinical enterprise, and we source innovation from both of those groups and invest in those innovations and move them forward. We do, from an approach, we have funds that we deploy that we think of as pre-venture. And then we have a fund that we actually exclusively reserve for investing in existing companies, bona fide ventures. But the vast majority of our activities or our investments are focused on innovations or technologies that have come from the Mount Sinai Health System. And I should take a step back and say that what is critical to us is that all of our investments are focused on companies and products and ideas that we believe will make a fundamental difference, improving the lives of patients and providing real value to society. So with that in mind, we also are starting to do more investment in external organizations, and in fact recently launched what's called Elemental Labs, which is a virtual incubator for engaging with external companies that have innovations that we believe would add value to our organization, to our clinical enterprise, across various areas, and that ultimately will benefit patients. Those are generally younger companies, and so we're building the ability to really interact with them. Now, we do have to have a clinical champion or some type of an operational champion internally when we're going to actually make investments in external companies. And of course, we like to invest in syndicates or in partnership with other healthcare providers or integrated delivery networks or other venture groups as well. So again, a lot of similarities, but maybe a few differences.
Yeah. And you all have helped grow a number of startup companies at various stages. Can you tell me about what sectors you feel are the ripest areas for VC investment at this particular point in time, or where you've had the most success? Matt, can you kick this one off?
Sure. So we invest in 3 verticals: services, software, devices. I think the services and software areas are booming right now as we look to reinvent the future healthcare system. And a lot of the themes that I think we're seeing, we are seeing our health system partners move from really talking about these things to really acting on them. So some of the macro themes are around revolutionizing the consumer experience. How do we create these personalized, need anticipatory, omnichannel experiences that our consumers want? The second is integrating this digital front door with the rest of the care continuum, where our health system partners are, I think, in a really good place to do that. The third is, as there's movement of care to the home, how do we radically change and improve our operating efficiency? So you'll see investments that we've made in digital workforce companies or value-based care companies. We talk about, if the future is the home, diversifying the revenue stream. So you'll see a whole host of partnerships We've invested in companies in the home health and hospice space, in the ambulatory surgery space, in the kidney care space. And then there's a couple other buckets here, one around innovative solutions, which to me is this new forum to evaluate different kinds of business models. So I think of health systems in the future marketing directly to consumers before they get sick to leverage and build that relationship. I think about aging in place. I think about behavioral. So really exciting time, but those would be some high-level themes, and I'll let Erik and Darren fill in the rest.
Erik, do you want to take it from there?
Yeah, sure, happy to. All the areas that Matt mentioned, I think, are very interesting, and there's tremendous opportunity. We've put a lot of effort into advanced diagnostics and prognostics over the last few years. We like technologies and opportunities where there's a combination of biomarkers plus, say, machine learning or an AI approach. We're also interested, again, this overlaps with what Matt was saying, but we're also interested in new models for delivering care, and do have investments in care at home, various flavors of that, and have made investments in operational tools that can create efficiencies within our organizations as well. Because we have such a large research enterprise, we're also active in therapeutics and medical devices as well. So more kind of traditional products that would become, again, add value for patients and would be utilized within a clinical setting. And then we'll look at some other items as well. But I think, again, advanced diagnostics and some specific medical devices, connected medical devices, and then we'll look at therapeutics as well.
What do you think, Darren?
So I'll try not to sound crazy when I say it, but we work hard to actually try not to really have a plan. And what I mean by that is that, using a little bit of Matt's rubric, our focus is around software as opposed to sort of services and devices. We think that there's a huge opportunity, an emerging opportunity in the whole healthcare IT space and what that really sort of means. But because we're so active in terms of our internal development, I mean, like most academic medical centers, we're proud of the discovery that takes place in the organization. It's not new. Academic medical centers have been discovering and innovating for 100+ years. And so we continue to do that. And we have a tech transfer division and we have fabulous successes. And that's a different conversation for a different day. But when it comes to sort of really trying to leverage this external innovation, we really try to take a really sort of humble and pragmatic approach. And that is that we're proud of the amazing ideas that take place within CedarsSinai, but we try really hard to recognize that we don't have an exclusivity on good ideas. And that, those good ideas are happening all over the place. And I think our only real measurement for folks, especially at that early stage, is, can we use it? And so we're focused on, business to business. We don't really think that, we're the right people to sponsor, consumer led technology. So we look at business to business and we sort of ask ourselves the question, can we really help this early stage company? And I know that the knee-jerk answer is, well, if you give them money, you'll help them. But there's a lot of people that can do that. And so we try to differentiate with, listen, if we were a customer or if we were their lab or experimental base, would that change the arc of the company? And honestly, what we find is that a lot of these early stage companies, healthcare and especially healthcare delivery is this like mysterious black box. They've heard about it. They know a few of the pieces. They might know the edges. I mean, to play a little bit to the stereotype, it's often young folk who are sort of starting these companies. They've probably not had a lot of direct interaction with the healthcare system. And so there's a lot of guessing going on. And so what we really try to do is we try to walk them through our organization. Of course, this was all pre-COVID. We try to connect them, through our ambulatory setups and really start to see what's really happening. And our goal, quite honestly, is to maybe convince some of the best and brightest entrepreneurs that if they're at this crossroads, instead of maybe creating another gaming app or another wellness app for well people, which is great. They're all important things. Imagine if we can focus their energy on acute and chronic problems and really get them excited about something. And so we almost view it in a way as part of our community mission. In the same way we serve our community with access to healthcare, we're attempting to serve our community, which we define pretty broadly because we reach all the way across the US and have even helped some international companies, really getting access to what the problems are in healthcare delivery. And, you know, I'll humbly submit that the good news is that we have a lot of problems. And so, you know, folks can come in and see them. And if they have great new innovative ways of looking at them, we consider that a success. And later down the road, people will decide whether their Series A valuation or Series B valuation is unicorn status or not. We spend more of our time just trying to figure out how we can help get them started and off on the right track.
I think a key question that health systems should be asking themselves, and Matt, you mentioned this a little bit, but whether they're pursuing venture capital investment for investment returns or for strategic purposes, or, you know, in some cases, both. So I'd like to learn a little bit about how you guys answer this question for your own organizations, and maybe share some advice on how C-suite leaders can identify this for their own, you know, health systems. Erik, maybe you can start out talking about what that means for Mount Sinai.
Yeah, absolutely. So for us, the answer is is both, right? So we view these activities are very strategic. Again, as I mentioned, there's a lot of focus on the internal innovations that are coming out of our research enterprise and our clinical enterprise. And then looking externally as well, because I agree completely with Darren. We don't have all of the great ideas, and others do. But to really be quite succinct on this, investment returns for us are folded back into our clinical enterprise. And they can be used to support more research on specific diseases, to create more technology. And so it becomes kind of a closed circle in a way where you're making investments, the financial returns for those investments, which often are strategic, the financial returns turn into more resources that can actually be used in your clinical enterprise and your research enterprise. And so for us, the answer is it's really both strategic as well as building a financial base to help grow our organization and increase the resources that we have to serve our community.
Darren, what would that look like for CedarsSinai?
So, not to be sort of too controversial about it, but I think that everybody's answer is often both. And Erik, I think that, we're in the same boat of we would say both. But, I'd also submit that after a number of years of being involved in this, I got some early advice when we first started to think about going down the road of venture investment, of really sort of folks asking, well, how long were you going to do it, and what really was sort of the end game around it? And I think I bring that up to maybe in advance pay some proper respect to Matt and the fund that funds that he runs. It's hard work. And I think that when you say both, I think that lessons I've learned is you have to step back, and you also have to sort of maybe acknowledge sort of a major and a minor. And for us, we have very, very crystal clarity that our major is around strategic innovation. In fact, the monies that we invest don't come out of our investment funds or endowment. They come out of working capital, which is a further proof of its really primarily a strategic initiative. Now, we would love if it was an and. Academic medical centers love ands and not ors. And so our and is sort of the back way of getting to both of, sure, we'd like a return on that, and we'd love to be able to tell a wonderful story. But if push came to shove and we had to pick, we are not a pure play financial investor. And that is the reason why we tend to, when we do invest, we work really hard at trying to syndicate, which is just a fancy way of saying pushing the work to others, to be the professional VCs around the table, because we know that that's their primary, and attaching sort of ourselves to their primary increases our likelihood of maybe getting the both. But, you know, I would say that some of the best stories we have of success were relatively flat financial outcomes, but wonderful, wonderful outcomes in terms of how we really change practice, innovation, and engagement of our staff and our patients.
How about for Ascension Ventures?
Yeah, so we take a different view here, which is for us, given we're raising capital from other not-for-profit health systems, financial returns come first. And one would argue with 70 plus health systems doing this today, without the ability and focus on financial returns, should your system be doing it? Once you start a program, it takes 5 to 7 years to figure out if the returns will be there. The strategic value, I think you could get at more quickly. The things that Darren and Erik mentioned, I think about the way to look at partnerships, the way to impact the culture and get folks to think about it's not always what's invented here, but how do we engage with the outside world, which is very different than when I started doing this 20 years ago. I think health systems in our model also build strategic value from this community of other health systems to hear how their priorities compare to the rest of the community, to learn and meet others in a much more deeper and trusted way. Health systems could still invest in a strategic fund like ours and get exposure, but the way they think about it strategically, I think should influence what they do. And we've seen several health systems get out of the business for one reason or another. And I think this gets into another richer discussion that you may take us down in the future here, Tara.
I'm curious, has the pandemic in any way altered the pace or the scope of your VC investment strategy? Has it changed the areas that you're interested in investing? Erik, maybe you can start this one off.
Yeah, sure. I don't think it has changed our activities particularly. Now, you know, we're much younger in terms of having funds that we're deploying in this manner, certainly than Matt's organization. So we don't have a lot of years to basically compare against. But no, I don't think it's changed things considerably. Now, because of our research enterprise, and we have a very, very robust microbiology group, and we had a number of innovations that came out related to SARS-CoV-2 and the pandemic, you know, that did increase some of our activities that were related. But in terms of investment itself, I don't think it has had a lot of impact. Now, of course, we're not meeting with people in person. Everything is virtual. And in some ways, the ability to meet through Zoom and to meet virtually and not having to travel and what have you is great. But there's some other disadvantages to that.
Absolutely. Matt, how about Ascension Ventures? Has the pandemic changed anything for you guys?
Yeah, so we were actually fundraising about a year ago. So back then, the sky was falling, liquidity was as a primary importance, and it was unclear what impact would happen to our rather large portfolio. If you fast forward a little bit, everything has settled down, and if anything, has been accelerated. So most of our companies are actually doing much better. And you sort of see this through this convergence of all these trends that are making this the most exciting time to be an investor, with more dollars being invested in healthcare than ever before, higher quality entrepreneurial talent than ever before, technology advances that are making it easier to tackle root cause issues. You're seeing health systems move much more assertively and with an active orientation to solving these problems. And this has also been mimicked in the markets as valuations in healthcare have started a trend towards the broader market from years of trading at a discount. So we're seeing companies of size with revenue growth rates that are starting to enable the creation of unicorns that we've really only dreamed about in healthcare. I think we looked at data that showed from 6 unicorns in 2016, we're on pace to generate over 60 in 2021. And what that means is what's next is the number of decacorns is the next thing to follow. I think only 6% of the unicorns that we've tracked have gone on to become decacorns, and we expect that number to increase as these problems keep getting larger and the opportunities get greater.
That's fascinating. Darren, how about you? Has the pandemic changed anything for CedarsSinai?
Well, first, I just want to acknowledge Matt's use of the word decacorn. I think it's sort of pause and sort of appreciate that. I think my observation is, and I'll leave it to others to figure out why, I've never seen activity busier. I've never seen more interest and energy for a lot of the specifics that sort of Matt and Erik sort of touched on. But everything just has a higher intensity, a higher speed. And I think, you know, the piece that I'll sort of pick up on is absolutely echo. I think that health systems that historically have been slow to react and change have actually observed themselves through the pandemic make major changes faster than they ever thought possible. Of course, it was a grand experiment none of us ever dreamed or ever wanted to run. But sort of coming out or towards coming out sort of the other side of that, I think people are starting to realize that, you know, maybe there's a little more agility than we gave ourselves credit for. And I think combine that with really sort of the urgency in terms of, you know, what's going on sort of in the marketplace generally, I think people are starting to sort of pick up pace. I worry a little bit about it, by the way. You know, I think that there may be a little bit of exuberance in some of the valuations that we're seeing. And, you know, Matt touched on a little bit, and I'll echo it. I worry especially for some health systems that are very new at investing and are just experimenting. You know, I think that it was easier to experiment 5 years ago and 10 years ago when just candidly the stakes were lower and you were sort of playing sort of at sort of easier levels. I just hope that people are super, super careful. And I'll even throw out my own little prediction here, since I know this is recorded and maybe someday somebody can play it back, is I just don't think you're going to see as many health systems involved in investing, or at least actively or directly, as you see now. I think that number is actually going to go down as, you know, things sort of shake themselves out a little bit. It's not going to be less innovation. It's not going to be less activity. I think that more people are going to pivot, though, towards the successful models that Matt has built up.
That'll be interesting to see. I'm curious, and kind of going off of that, I'm curious what mistakes perhaps you've seen others make, what mistakes maybe you yourselves have made with respect to VC investment that maybe you'd caution our audience members about. Matt, do you want to start that one off?
Oh, I've got 20 years of battle scars on this one. So I think the first question I ask is, why are you embarking on this strategy and how will you measure success? I asked, do you have the right team that has internal credibility and the strong social network to interact with traditional venture investors? Do you have durable and broad C-level support? Does your health system have the right culture, the right people, the right scaling capabilities? The worst thing is to bring in a deal and your internal infrastructure not be able to handle what's expected, and you start to get negative brand affiliation. Are you committing enough capital so that your organization could attract the right and best people? Do you have a separate governance, a pace, a process that could react to the industry speeding up like Darren talked about? Where are your early wins going to come from to silence the skeptics? How are you going to be differentiated in the market versus all these other organizations? And does your organization realize that the balance of power has shifted from the large institutions like the three of us represent to the entrepreneur? And will your organization be able to present the right partner-facing front door to those organizations? Would be a few that come to mind.
Darren, how about you? You were kind of going in this direction, but I mean, any kind of mistakes that you would caution folks against?
I think many and many that I've made, so I can speak from experience. I think two I'll highlight. pay close attention to make sure that there's not white space between your operational and clinical teams and your innovation teams. And what I mean by that is that if you have an external innovation team that's scouting the land and making connections with folks and potentially making promises, make sure they really are tightly connected to those operational clinical folks that need to come back to home base and use the product itself. The second one is, and I think it's especially hard at academic medical centers, sometimes you just have to be able to sort of step back and realize that the big influence you may have on a little company to create something custom or bespoke for you is tempting and is an easy pitfall to fall into. But it's super important that you're sort of really able to recognize that your goal is not for them to create a customer of one, because that is a recipe of failure. Your goal is to help them have a broad business with many customers that really provides a stable foundation. Because if you were going to custom build, you would have done that in the first place. And so don't turn sort of an apple into an orange. Make sure that you're really staying true to what the objective was.
Yeah, that's a really good point. Erik, what about you? Do you have any kind of pitfalls that folks should look out for?
I think Matt and Darren actually covered the waterfront pretty well. A lot of what they said resonated with me very well. I think, if you're going to build this kind of a program, you have to know that you've got alignment, the right leadership, the staying power. This isn't, you shouldn't do something like this as a hobby. This isn't a hobby. Everything again that Matt kind of laid out in his comments, I thought was really appropriate. I don't know whether it would be more or less in the future. I think each organization has to build a program. If they're going to do this, they have to build a program that fits their culture, their organization, meets their needs, and not try to build something based on what they see someplace else. Again, as I said, we're predominantly investing in our own innovations and in what we're doing, and starting to look externally, but very carefully. And so I think that's the only thing that I would add, but it still kind of falls within what Darren and Matt had said as well.
Yeah, I think there are probably a number of health system C-suite execs in our audience who might be wondering whether they themselves should invest in venture capital opportunities or even launch their own funds. Curious what advice you guys would give them. Darren, do you want to start that off?
My advice would be find a partner. Take it slow, experiment. If you're sort of feeling a burning itch to jump into the investing game, do so with a respected group of, syndicated, sort of experienced investors. See how that goes. See what it feels like. Do it in something that is maybe a solution that's core to sort of what you use, and so the risks are relatively low, and sort of work your way through. The way not to do it is to open an office on Sand Hill Road and announce sort of something big, and go for sort of the big we're hanging up a shingle. I think that it takes a while to sort of build and develop a reputation, and candidly be able to sort of figure out the right types of talent that need to be brought into the organization, which is a really important piece that I think sometimes folks overlook.
Absolutely. Erik, any pieces of advice you'd give our audience members who are maybe considering if VC is right for them?
Yeah, again, I think that a lot of comments that have been made during this, this panel are on point with that. But yeah, patience. Think about it very carefully. Plan carefully. Include others. Talk to others. And if you're going to launch something, do so in a manner that is, conservative, patience, build it over time. there's great strategies where you can partner with other healthcare systems and invest in groups with other healthcare systems that can dramatically reduce the risk that you're taking when you're making these investments. I think leading or going alone is a strategy that we won't do, and it's one that I would generally counsel against. So I think I'll leave it at that.
Matt, what would be your kind of biggest piece of advice?
So 3 points I would share. First, this business is getting harder, not easier. Find a partner, and as Erik and Darren mentioned, there's a lot more options in terms of flavor of partners. So you could find the right one or two that work for you. And then number 3, figure out how to integrate those partners with your organization so you extract the most value from those relationships. Darren talked about the white space internally within Cedars between clinical and the innovation groups. You got to think about the white space between your venture partners and your internal teams in much the same way.
Gotcha. We're nearing the end of the session. It looks like we are kind of waiting on some questions. If the audience members have questions for the panelists, please. Oh, we got one here. What advice would you give for early stage companies for best engaging with your venture capital programs? What KPIs do you look for when evaluating your investment opportunities? Does anyone want to take that one?
So we spend a lot of time with super early stage companies. In fact, we even built a program around it. We have our CedarsSinai accelerator. And, one of the things that I love about the accelerator is the way it's constructed a little bit in reverse from a traditional sort of CIO or technology role. What I mean by that is that, as sort of a corporate IT leader, most of my role is to take really good ideas that are developed at the enterprise level, and we push them down to folks, and we tell them, this is going to be better for you. You're going to love it. It's going to be great. And there's a lot of technology like ERPs and other things that just sort of go in that direction. When it comes to early stage companies, we found that we wanted to organize how they knocked on our front door. And so we collect them all into literally what we just think of as applications to apply for a spot in our accelerator. And we have a team that narrows down everything that's viable. They don't select the companies. They just, figure out that if 400 applied, these 50 are viable. And then what we do is we bring together leaders across the operational and clinical domains, and we create sort of an opportunity. Used to be physically in a room, now we do it virtually. And they hear these pitch presentations of all these different companies, and it's a pull. What happens is if our chief nursing officer says, hey, I really like that, I want to work with that, our job is to say, sure, let's make a match. That's sort of this double opt-in idea. And, we see sort of what energy can get created around it. And so to the, person's questions about KPIs, we have them eventually, but we try not to set them up front because we don't really know what we're looking for until there's some of that match. And all we're really looking for is for an operational or a clinical executive to be willing to put in the time to quote unquote sponsor an early stage company coming in. And if we see that, that's usually where we'll use it as an indicator to throw some energy around it.
Anyone else want to tackle that one?
I'm happy to share my view, Tara, which is as you go earlier, the number of companies increases exponentially, and folks like me are looking for signals to differentiate what's real from what is hype. And the typical places I look for are early customer signings, early signs of ROI, referenceable customer base, backgrounds and serial success of the founding team, who the angels, early board members, early mentors are. You need to have all of that in place to, I think, attract the attention of early stage investors right now to help us parse through the noise.
Yeah, I would just add that, these engagements can be they require a tremendous amount of effort on both parties. And so for us to engage, we've got to see that the entity that, the company that we're talking with is solving a real problem, that we've got an internal champion, kind of like Darren was saying. Is there a pull? Is somebody within our organization saying, this is special, this is different, this adds value, this solves a problem for us? We're also looking at, how mature is the organization from, getting really into the nitty gritty now, like information security. If it's a software company or a software enabled service, can we plug them in a manner where we're confident that their systems are secure? They have to be able to go through a full security audit. And so have they built from the beginning, from day one, thinking about those kinds of issues? Because otherwise the lift is it's too much. So, a lot of the comments resonate with me as well. But to me, I go back to, is it solving a really critical problem that we have? Do we have an internal champion? And is this something that we would really want to do? Otherwise, we don't want to take time from the company either, because maybe there's somebody else out there that would be a better partner.
I just had a quick final question, unless there's any additional from the audience. I wrote yesterday about Ascension Ventures' second fund, and I noticed that there were a number of health systems that have been strategic limited partners with Ascension Ventures. And I'm just curious, if you're a health system thinking about whether to be a limited partner on a fund that's existing or start your own fund, are you guys often doing both, or are you a limited partner if you're just kind of a burgeoning venture capital arm?
I think when you ask the question about ways to get started, I think becoming an LP in a fund that appeals to you in terms of the strategy and other partners, I think is a great way to get started.
Remember, Tara, our model is for Ascension, we're their venture arm, but for the other 12 systems, we're their third-party partner. So it is a great way to learn and see how hard this business is. So you could really ask yourself, what's the right way for you to get involved in this space?
And oh, go ahead.
I was just going to say, in our case, we are limited in some funds that is managed by a different group. And then we have our internal funds that I've been discussing today.
And Matt, I'm just curious, do those 12 systems have their own funds as well?
It's a wonderful question. So some of them view us as their sort of venture fund. Some folks have their own venture fund. Some folks make investments right off their balance sheet directly in companies. So this gets back to there's many more flavors and options available today than there have ever been, that a health system really needs to think about their strategy and whether they want to crawl before they walk, before they run. And I think the advice you've heard from me and I think from Darren is, it may be better during these times to find a good partner to learn from before you decide to jump off the deep end of the pool.
Excellent. Well, thank you guys all for being on this panel. This has been really great. I think Maria's going to come on and take us out.
Yes. Thank you to our panelists. Thank you to our audience. And thanks, Tara Bano, for excellent moderating. We will now have a brief 5-minute transition to be taken back to the lobby screen. You will click on the agenda tile to select and enter your next session. Thanks so much, everyone. Have a great day.
Bye, everyone.
Bye-bye. Thank you.
Thanks.